Everyone wants to make money in the stock market. But here's the truth. Most beginners lose money, not because stocks are bad, but because they don't know what they're doing. So before you put a single dollar into the stock market, you need to understand some hard truths. In this video, I'll share the 5 things you must know before investing in stocks, including the mistakes that wipe out beginners and the strategies that actually work. If you're thinking about investing, this could save you thousands of dollars and years of regret. First, stocks are not a lottery ticket. Yes, you've heard the stories. People who bought Amazon in 1997 or Tesla in 2012 and became millionaires. But for every success story, there are thousands of people who bought the wrong stock and lost it all. For example, in 1999, Pets.com was one of the hottest internet stocks. Within 2 years, it went bankrupt, and investors lost everything. The stock market can make you rich, but it usually does so slowly, over years or even decades. If you're investing with the mindset of striking gold overnight, you're setting yourself up for disappointment. Second, you need to understand risk. Stock prices can swing wildly. In 2022, tech giants like Meta and Netflix lost over 50% of their value in just months. Imagine putting in $10,000 and watching half of it disappear. That's the reality of the stock market. If you panic, sell at the bottom, and chase hype, you're almost guaranteed to lose. But here's the good news. History shows that the market recovers and grows in the long run. Those who stay patient usually win. Those who chase trends usually lose. Third, never invest in something you don't understand. Warren Buffett's famous rule is, never invest in a business you can't explain to a 10-year-old. Too many beginners, honestly, throw money into companies they know nothing about just because a friend, TikTok, or social media told them it's going to the moon. For example, in 2021, millions piled into meme stocks like GameStop and AMC. Some made quick profits, but honestly, most latecomers lost when the hype faded. Before you buy a stock, ask yourself, what does this company do? How does it make money? Is it profitable or just hyped? If you can't answer those, you're gambling, not investing. Fourth, don't put all your eggs in one basket. Just imagine if you had put every pound into Enron, a company once praised as the future of energy. In 2001, it collapsed in scandal and investors lost billions. That's why, honestly, diversification matters. Instead of betting everything on one company, spread your money across multiple stocks, or better yet, index funds that hold hundreds of companies. Diversification is like insurance. It won't make you rich overnight, but it will protect you from losing everything when one stock fails. Finally, the stock market rewards the patient, not the emotional. If you look at the S&P 500 over any 20-year period in history, it has always grown. Always. But in the short term, it's chaos. Wars, recessions, pandemics, they all cause temporary crashes. The people who win are the ones who have a plan and stick to it. They invest consistently, month after month, and let compounding do its magic. If you're investing money you'll need next year, don't put it in stocks. Stocks are for long-term wealth building, not short-term spending. So here's the bottom line. Don't invest in stocks until you understand this. Stocks can make you rich, but they can also make you broke. They require patience, research, diversification, and most importantly, a long-term mindset. If you treat investing like gambling, you'll lose. But if you treat it like building wealth over time, the stock market can be one of the most powerful tools you'll ever use. If this helped you, hit that like button, subscribe for more financial wisdom, and tell me in the comments. Are you investing for the short term or the long term? Thanks for watching, and remember, investing is a marathon, not a sprint.